Hello, my name is Daniel and I'm back again with another in-depth analysis. This time I'll be looking at La Française des Jeux. It's a French multinational company which even in Europe is quite unknown, so that's why I wanted to take a look at it, as I definitely like to look at more companies that are not talked about. So let's get into it. I'll glance over the business profile. So what do they actually do? And looking into the strength of the company. Is it financially stable? Is it also actually profitable? How profitable? What are the numbers behind the company? And in the end, I'm gonna wrap it all up with a valuation of Française des Jeux. I'll call it FDG for short. I've done analysis like this before. You can look on my channel. I have a couple there about for example, the last one I revisited Flow Traders, which also was a financial firm, just like this one. This is a financial company. FDJ is 7.3 billion euro lottery in France. It's one of the few, if at all, maybe perhaps the only one actual lottery publicly listed. Most of the lotteries in Europe are nationalized, like Nederlandse Staatsloterij in the Netherlands or in Norway or other countries. And in France, it's, as far as I'm aware, the only country, or one of the only countries where you can actually own the what you call it, the lottery. And that's why I took a look at it. It's the second largest lottery in Europe. It has an over 50% of gross gaming revenue market share in France, so it's essentially a monopolist. That's a lot for a single player. And it has exclusive rights until 2044, which is quite a long time to have a state-regulated monopoly. It also has an online segment which is growing a bit fast in its legacy business, and overall it has over 25 million players. How does this look like in numbers? Well, here you can see it, 19 billion, at least in last full year, of which we have numbers, which is 2021, 2022, be released somewhere in February most likely. But 19 billion in stakes. To quickly explain what those are, a lottery, most people are mostly familiar with what they do. They sell some cards or some for the draw or something, or some which you can quickly get a result from, or sometimes you have to wait a bit. But essentially, they pool a large bunch of money together. All the stakes, that's all the money that comes in, and then they have to pay out a certain percentage of it, or a set amount, depending on how a lottery structures the games. And that's exactly what FDG also does. This can be divided into some sports betting as well, which, for example, with the current World Cup, is probably doing quite fine right now. The lottery segment is their largest and their more legacy business, so to say, as they have been operating this for decades now. I could not find any financial data earlier than, or much earlier than 2000, but they have been around for a while and only have been recently IPO'd back in 2019, it was, I believe. And they have a strong track record of growth, so that's essentially what that monopoly position all boils down to: high margins, 23% EBITDA of revenue, and around 10% net income margin. So those are quite decent numbers. So that's why I was initially interested in this company after a quick glance. And to further understand the company, this table, this is essentially everything there is to this company. If you understand this, you understand their entire business model. They have some games, for example, Lotto Euro Millions or sports point of sale sports betting. Then they get some stakes in. That's the number from here, the total cards bought, for example. Get a certain amount of money. They have to pay out a certain amount, and that amount is regulated, how much they have to pay out and how much they can pay out. For example, with the sports betting, they're allowed to pay out a bit more than with the lottery. That's not to entice people too much into turning the game into gambling or an addiction. And then after that, a tax rate is applied on the payout minus or the stakes minus the payout. It's your gross gaming revenue, GGR. The tax rate is applied to that. In certain cases, quite high. In the sports betting segment, on average, a bit lower than in the lottery segment. And then this is essentially what the margins, the remaining margins are for Française, which is 100% minus this, which quite logically is quite logical in that case. So you can see their legacy segment, the lottery business, is actually one of their lowest margin segments in that regard. The newer segments, especially online, and is a bit higher. The point of sale sports betting has the highest margin, but has the lowest growth out of all of these, but I'll get into that later. So, having looked at the company, very quickly, or glanced over the company, we want to know, is it actually, how is it standing, and who owns it, perhaps. That's also something important to look at when buying. So I took out the balance sheet. It's a financial firm. So it's in that sense quite similar actually to analyzing an insurance business. That makes it slightly more difficult because the balance sheet itself, you cannot really derive that much from the normal one, at least. This is the balance sheet provided by the company themselves. Most recent one at the time of making the presentation, at least. They publish most results semi-annually instead of quarterly, but that aside, this is one of the more recent ones. You'll see a lot of assets with operating rights and some receivables. Also a lot of, what was it, financial assets. And this entire mess of a balance sheet essentially boils down to them owning a lot of derivatives or cash equivalents and stuff like that, and having a lot of obligations towards payout. Because when you organize a lottery, you get a large pool of money. This money, you have to pay out a certain amount at some point. So in the meantime, you can do all kinds of stuff with that money, just like an insurance company does before they have to pay out. Although for the lottery business, they know when they have to pay out and how much. For insurance businesses, it's slightly more variable in that sense, but here it's very regulated how much is paid out. And that results in them actually knowing when they have to pay out what exactly. So that leads to a fiscal regime of mostly cash equivalents or shorter term investments and some equities. Though the investments they make is more than 80% at a minimum is in cash or cash equivalents like money market funds or short-term bonds and not maturing longer than in 3 years. So so they do generate some additional return through all this financial stuff, but it's not their main source of income. That's still they're actually operating lotteries. Some insurance companies do make a whole bunch of money from actually investing the money and getting that money put to work and slack a bit off in their insurance business. That's not the case here. The lottery business is very profitable, and the investment segment is fairly small and almost negligible in that sense in comparison to the overall business. And the balance sheet itself, to be honest, is not that useful to in this sense to engage the current situation, as it has a lot of calendar or seasonal effects, like for example, a certain lottery draw might temporarily really reduce the amount of cash on the balance sheet for a quarter. or if they just launched a new game, the balance sheet will appear with a lot of cash and cash equivalents suddenly with some obligations related to it. But all know that yeah, that really the balance sheet is really moving up and down every time you look at it. They invented a net cash surplus thing for that. I'll excluded that out in my valuation or further analysis, as I just leave the balance sheet be in that sense. They have enough cash to cover liquidity. They have set rules to not invest more than 4% in equities, and their portfolio in that sense is fairly conservative. And with that net cash surplus, to be honest, they can do whatever they want as long as they don't, yeah, invest money in things that I could get a higher return on. In that case, I would rather have them return it to shareholders. But about those shareholders, how is this company actually owned? This is one of the most diverse shareholder registers I've seen in a while. The French state owns 20% of it. That is to be expected as they do grant exclusive operating licenses, which also are listed in the balance sheet, but let's put that aside. That's not too surprising. Veteran associations are something I've never seen on a register before. I've seen non-profits on registers, like the Bill Gates Foundation, for example, for I think it was waste management and Ecolab. But here it's a French non-profit for victims of war and veterans. And yeah, they use the dividends paid out by Française Jeux to fund their charity. So that's something interesting to note. Some employees also have a couple shares, not too many in France. That's a bit more common than outside of France. In the US, you won't really see things like this. And there's, of course, some institutional investors and individual investors. So very diverse shareholder structure. But let's get into why would anyone actually want to own this business? For that, I would normally just refer to top and bottom line. First, I'll look at the top line. How's the lottery business before all costs or most costs doing? Revenue is defined as the stakes minus the payout, minus some levies paid to the government, some other items. That is what they define as revenue here. So this is not the stakes itself. That isn't defined as revenue here. So this is, could say this is adjusted revenue. And we see top line relative growth. It's slowing down though to 4 to 5%. Although management has indicated it will most likely be at the higher end of that small range, but we'll have to see if they can actually make that happen. High margins, increasing margins, that's also something worth noting. The 25% target is not that far away from where we currently are, especially considering the more than 3 percentage point margin increase over the last 3 years. This doesn't seem too unrealistic in that sense. And if we look at a bit further, this is 1997 is the furthest they've noted in their investor day, their recent investor day at least. And we can see, consistent growth over the years, some flatlining during economic recessions or in peak boom cycles. This business acts slightly counter-cyclical, which is interesting to note. Their revenues do bump up a bit after economic downturns, and sometimes even during a bit, which is interesting to note. It's similar to tobacco companies during recessions. They tend to have more customers. The lottery also seems to have a similar trend, although not specifically looked into other lotteries if they show something like that, but they really seem to grow a bit, get this small spurt after every recession, not during though. So that's something worth noting, in my opinion, that it really has low correlation with the rest of the stock market. That's perhaps why one could consider it a decent addition to a portfolio, diversify a bit, get some exposure to a different kind of risk in that sense. So, okay, these top line numbers, what I currently have just showed was mostly revenue and gross gaming revenue related things. Here again is how they calculate all those numbers. They have their stakes, so cards sold, the money that comes in, they have to pay out a bit. Then they get their gross gaming revenue. Then they have to pay some public levies because they're a monopoly essentially. And some other revenue, for example, sports betting, additional revenue, or some other things. Then you get net gaming revenue. Then they add some other stuff on top of that, and then you get your regular revenue as defined by them. You can subtract some other items. Note that I have left out some items here. At the bottom I list EBITDA, net income, free cash flows. Those three, together with bold numbers, in my opinion, are the most important ones. EBITDA generally represents something similar to operating income, although you do subtract a couple other costs from it. Yeah, if you subtract interest and taxes from it and leave in depreciation, appreciation, the interesting thing to note is that you then get numbers similar to the free cash flow with this company. That's not always the case, but with this company you get numbers very similar to free cash flow. So if you take your net income, add back depreciation, appreciation, in some years, not all years, you get similar numbers to the free cash flow with Française, especially in 2021. But in analyst predictions, my own predictions, I also get a similar effect. Management notes that free cash flow, which would be around 80%, not free cash flow, but that EBITDA would be 20% of revenue, and free cash flow, net income related things would be 80% of EBITDA approximately, depending on the year. And yeah, we have seen that so far the net income, free cash flow have really followed each other, except from 2021. There was some major, in that sense, other items that did impact it. Future, I expect that difference to remain as they are doing more acquisitions now and depreciating a lot, which helps for tax purposes, but for actually estimating the underlying income of the company, that's less ideal. Also, I did talk about margins. EBITDA margins are consistently around 20% and growing, but as it is a financial firm, I wanted to look at return on equity. What do they actually generate with with their own capital in that sense? And those returns are just stellar. They provide very high return on equity over the years. Keep in mind they've only been public since 2019, I believe. They IPO'd. So the previous years, we have less data about, but they have had very consistently high, even during COVID, return on equity. So that's something worth noting that these numbers are mid double digits. That's high. It's very high, especially compared to other insurance companies. So, what does this company actually expect to do in the future, and how does that? Let's get into that, as that is quite fundamental to our valuation in the end. So the company really expects to make more from online betting, and they're already one of the larger ones in that sense, but they're still growing quite fast, especially compared to competition like Camelot, but other competition doesn't. They're in the top 5. They're the fastest growing one, at least last year, and this is very handpicked by management, of course, in their investor presentation. But generally they're gaining market share in the online landscape, which is something worth noting. They are really growing players a lot. Players have almost doubled. It's nearly end of 2022. So yeah, if we hit numbers above this, yeah, they expect growth to pick up. That yeah, for them that would be amazing. Online stakes are growing with it as well. And yeah, for themselves, they can see that online betting is becoming a bigger and bigger part of their business. Was a bit flat before COVID, but now it really took off, and they really expect it to explode over the next couple of years. So that's something interesting to note. How are they actually supporting this online growth? They acquired ZTurf, that's an online sports betting, horse race betting company in France. That will add a new segment for them. They also just opened a new online poker segment, and they expect a lot of their sports betting people to be interested in those new games offered. We'll see if these provided numbers. I think these were based on a survey, a couple of surveys. If these numbers actually hold up, we'll see. They also recently integrated Alida, it's a point of sale systems company software, to streamline more of the point of sale software, which still is one of their main income sources. So overall, yeah, they are doing stuff, adding new verticals like poker and horse race betting. We'll see how that goes. We don't really have a track record aside from the sports betting on adding new verticals, so that went quite well. So I expect these two segments to also do quite well, although these are listed as lower growth segments. That can be seen here, that sports really has taken off, but poker, horse is relatively steady. But if they can get decent margins on it, then that's still a very nice addition to the business model. As said earlier, they're gaining market share. That by buying their competition and having exclusive operating rights in the point of sale segments, they have it quite easy in that sense to gain market share, but they're gaining market share online as well. That's where they still have competition. So that's good to see that they're not only surviving because of their point of sale business. So taking all of this into account, and to not make this too long, let's get to the valuation. I listed some numbers here, so price earnings multiples, return on equity, return on total capital, some margins. This is for a quick glance. I'll have a slightly more in-depth model on the next slide, but yeah, overall it's relatively expensive compared to the rest of the European market. The European market trades at quite a low multiple, especially forward multiple. But what you are getting here is quality and high returns. If they continue to get returns like this, then a 20 price multiple is not that bad. And high margins, if they increase margins, your multiple will also come down a bit, especially if growth picks up a bit in the next couple of years. But that is to be seen. So what are those expectations? The management had provided some numbers, about 5%, 3 to 5%, if I recall correctly, annual growth of stakes. The player payout, public levies, I estimated myself, just like the other revenue from sports betting. I added some integrations. This is the ZTurf annual revenue, which I added, plus some margin of error. And they'll probably add more companies to their repository of acquisitions, but we cannot know what those are and when they're gonna happen. So they're not in this analysis. I also have some other activities which I'll keep at 50. this will leave us with this revenue stream consistently growing at around 3%, 4%, something along those lines, slightly lower growth in later years. And cost of sales consistently growing together with stakes and player payout, or just gross gaming revenue in general, as their legacy business still has increased costs. If sales go up, their marketing, they have had growing marketing expenses over the last years. I expect that to continue. And general admin expenses, those haven't really been increasing before. I do not really expect them to increase a lot in the future, so those will remain relatively steady. That leaves us with an EBITDA from 564 million to 664 million in 2026. Net income numbers around slightly less than slightly more than half of that, and free cash flow numbers around 80%. And that just leaves us with increasing income in a consistent way, consistent, relatively low growth in that sense, but with the quality of the business behind it, having it growing fast would really earn it a even higher multiple. Taking the free cash flow numbers into account, I get to an internal rate of return, so where the net present value is 0, so a discount rate of around 9%. Given the risk of this company, it's essentially fully regulated. I wouldn't complain. It's a low beta company. It has low correlation with the rest of the market. It provides quite a decent return. Could it grow fast on this? It certainly could, with some smart acquisitions and actual expanding of margins. Beyond that, I really took a low growth rate of 2% after this. Free cash flow itself might grow a bit faster for a couple of years after that. Why would it slow down? It hasn't really slowed down in the last 10 years. So there is no very good reason to believe that it would, but for the analysis sake, I did slow it down, as that adds a bit less uncertainty on our part. So that still leaves it with quite a solid internal rate of return, although I would like it to be a bit cheaper, but given the quality of this company, I do not see too large share movements. So that wraps it up, and if you want to see more analysis like this, feel to subscribe. If you have any questions, ask them. I answer most questions related to the companies I look at on these channels, and it's a hobby of mine, so it's fun. So I'll see you in the next one.